This is your Wall Street wake-up call. Global stocks are stable after yesterday's rally. Let's bring in Simon Smith now, the chief economist at FxPro based in London. So, Simon, European stocks rose 3% on Monday after polls showed the Remain side of this Brexit debate was leading. But another poll today shows the opposite and stocks are steady. So what's going on here?
All polls tend to show slightly different. There are sampling errors. There are differences between online and phone polls. So I think the bottom line is that yesterday was pivotal in terms of the shift that we saw over the polls that were released over the weekend. And now it's hard, for markets is I think essentially sitting on the fence with less fear than was priced in last week, but to move significantly in terms of pricing in for the Remain scenario, it's hard to get over that hurdle because still there's around 12-14% who are undecided. Then you have to look at the turnout, and there's too many uncertainties still prevailing.
And do you agree with billionaire investor George Soros, who was out with an op-ed in The Guardian warning of a currency crisis if the UK were to leave?
It certainly won't be pretty for the pound. Whether it's going to sort of compare with a sort of ERM crisis back in the early 90s, of which Soros made his fame, perhaps not. But I still think you would, very easily see initially a sort of 10-15% fall in the pound. But thereafter, yes, it's the uncertainty that I think will be hard. If you look at the beginning part of the year, we saw sterling falling. I think part of that was in anticipation of the uncertainty created around the vote. And, we still have a near 8% current account deficit to fund, and that requires attracting funds from overseas. So there's only a few ways you do that: better return on your assets, or a lower pound making them sort of more competitively valued. So yeah, I can still, in that scenario of Brexit, given the uncertainties that prevail over a 2-year plus period, I can easily see the pound continuing lower.
Now, there are plenty of economists calling for a UK recession if the UK leaves the EU. Do you think, number one, that would happen? And number two, do you think that would spread to the rest of the world and become sort of a global recession?
I think the chances of a recession are fairly strong. I don't think it's a certainty, but I think it will be also very mild. Because I think you'd see the government shift from sort of talking down the impact of a Brexit on the sort of, talking down the economy on the impact of Brexit, to then having to sort of downplay it. Don't worry, so nothing will change. Everything's as business as usual for the interim, and that's in their interest to do that, to create stability in the economy, because that's what brings in tax revenues. Will that spread a slowing economy? I don't think so. I think there will be some contagion to our major trading partners, Ireland, for example, but I don't see it spreading. You have to differentiate. What we've seen in financial markets recently, where it seems to have impacted all of them, was more just a risk play. So there's no point in taking on a risky asset ahead of such an uncertain event, which could scupper your gains. But I think on economic terms, it's going to be much more localised. So the UK will be facing a period of uncertainty, which will hold back investment, hold back consumer spending, etc. But I don't think it's not of the same scale that's going to send it globally.
All right, we will be watching this all play out. That Brexit vote happens on Thursday. Simon Smith from FxPro in London. Simon, thank you.
Thank you.
I'm Scott Gam, and you're watching The Street.